Some folks find the thrill of delving into company research, crunching financial data, and forecasting market trends exhilarating, don't they? It can be a mentally stimulating challenge for them. However, for many others, it's quite the opposite. The pressure and anxiety it brings are overwhelming. Most people don't want to spend their days glued to stock updates or dedicate hours each morning to this pursuit. It breeds more fear, stress, and frustration than anything else. It's an emotional roller coaster that many prefer to avoid, myself included. That's why I lean towards ETFs and steer clear of individual stocks. If you're passionate about individual stock investments, please share your thoughts in the comments below. But if, like me, you find ETFs more appealing, stay tuned. I'll explain why I believe ETFs have distinct advantages that make them preferable for most retail investors. In this video, I'll outline 9 reasons why I think ETFs outshine individual stock picking, with number 8 being particularly significant. Let's dive in. The primary reason I favor ETFs is diversification. ETFs typically contain a mix of securities, bonds, stocks, and more, spreading your investment risk across different companies and sectors. Think healthcare, technology, communication, all in one ETF. Diversification lowers the impact of underperforming companies. If you invest solely in individual stocks, you miss out on this risk-mitigating diversity, unless you manage a vast portfolio across various sectors. Alternatively, you could invest in an ETF with 500 or even 1,000 different stocks, achieving instant diversification across sectors, asset types, regions, and company sizes. This makes it easier to manage risk compared to individual stocks, where a single poorly performing company can significantly impact your portfolio. Diversification is my top reason for favoring ETFs over stocks. Now, the second point revolves around reduced volatility. With an ETF, there's generally less volatility due to the diversification we discussed earlier, right? Risks are spread out, resulting in an ETF experiencing fewer extreme highs and lows compared to an individual stock. This translates to reduced stress, anxiety, fear, and ultimately better health. Wouldn't you agree? Individual stocks can show significant price fluctuations in a short period. High one week, low the next, due to various influences like economic indicators, global geopolitical events, or shifts in investor sentiment. People tend to be emotionally invested in individual stocks, affecting their performance. ETFs offer a more stable environment by minimizing these sudden price swings and related concerns. That's why I favor ETFs over stocks for their reduced volatility. Moving on, the third reason is lower costs. Investing in an ETF often means lower expenses compared to purchasing multiple individual stocks. ETFs typically boast low expense ratios, translating to minimal costs and fees. Plus, you can sidestep brokerage fees, usually tied to buying and selling individual stocks, along with transaction fees. These fees eat into your investment returns, especially with frequent trading activities like day trading or extensive individual stock trading. Higher fees can quickly erode your gains. Hence, my preference for ETFs due to their cost effectiveness. If you're finding value in this content, please hit the like button and consider subscribing to the channel if you haven't already. Also, share this video with your friends and family. Now, let's move on to the fourth point. I appreciate the liquidity aspect of ETFs. They trade on stock exchanges like individual stocks, providing retail investors like us with the ability to buy and sell ETF shares throughout the trading day. This liquidity mirrors that of individual stocks, yet ETFs come with additional advantages as I've outlined. Next up, point number 5 is about accessibility. ETFs offer a broad array of asset classes, sectors, and markets, including bonds, stocks, commodities, specialty ETFs, and socially conscious options. Some of these assets are challenging to access directly, but become accessible through ETFs. This accessibility empowers regular retail investors like most of us to diversify our portfolios easily and affordably while gaining exposure to a wide range of investment opportunities through ETFs. The sixth factor that makes me prefer ETFs is transparency. ETFs typically disclose all their holdings regularly, so you know exactly what you're investing in without any hidden information. This transparency gives us regular investors a clear understanding of where our money is going, enabling us to make more informed investment choices. Just like individual companies report their earnings and hold shareholder meetings, ETFs also provide a level of transparency. This transparency is vital for us to have confidence in our investments. Moving on to the seventh reason, ETFs offer flexibility. They can be traded on stock exchanges like individual stocks, allowing us to implement various trading strategies such as margin trading, short selling, or using options. This flexibility gives us the opportunity to explore different investment approaches while still benefiting from the diversification, lower risk, and reduced volatility that ETFs offer. Now let's discuss number 8, which is perhaps the most compelling reason to consider ETFs over individual stocks. Number 8 simply boils down to time efficiency. Researching ETFs requires significantly less time compared to researching individual companies. Instead of delving into detailed financial documents, earnings statements, and company news, ETF research focuses on the sector, tracking errors, fees, past performance, and the overall composition of the ETF. This streamlined research process saves time and energy, making ETFs a more manageable option for many retail investors who may not have the resources or expertise to extensively analyze individual companies. While research is still necessary when investing in ETFs, the level of depth required is notably less, which can be a major advantage for busy investors seeking a more straightforward investment approach. Now let's talk about the 9th reason, which is quite significant as well. One of the main reasons I prefer ETFs over individual stocks is the reduction in psychological biases. When we discuss investing in ETFs, we're essentially talking about a realm that's less emotional and less prone to the gamesmanship often associated with individual stock investments. Individual stock investors frequently exhibit overconfidence, pushiness, and succumb to herd mentality. You'll hear sentiments like, "This stock is plummeting, we need to sell," or "This stock is soaring, let's buy in." This herd mentality often leads to emotional decision-making and irrational behavior, such as chasing trends or panic selling during market downturns. In contrast, ETF investing offers a sense of stability, lower risk, and a feeling of security that helps mitigate these psychological biases. While there's still risk involved in ETFs, it's typically lower than the risk associated with individual stocks. The hyperactivity and psychological pressures of individual stock picking aren't as prevalent in the world of ETFs, making them a calmer, more rational choice in my view. However, it's crucial to consider your investment goals, risk tolerance, and timeline before deciding whether ETFs or a mix of ETFs and individual stocks suit your portfolio. Ultimately, the decision depends on your personal preferences, time commitment, knowledge, and comfort level with risk. If you enjoy the process of picking individual stocks and have the expertise to do so effectively, that's perfectly valid. On the other hand, if you find it stressful and prefer a more stable investment approach, ETFs offer a viable alternative. If you're interested in my top recommendations for ETFs or want to learn more about different types of ETFs, check out the related videos linked here. Peace out!